Dear Mr. President Rhein, dear Mrs. Baer, dear Mrs. WEIMER, liebe Damen und Herren, ladies and gentlemen. So allow me to introduce myself. Many of you think that I'm the President of the European Central Bank. And I am. But I'm also a very happy French national in Frankfurt. And it is from that position that I'm going to address you this afternoon. Das Leben gehört dem Lebendigen an, und wer lebt, muss auf Wechsel gefasst sein. These are the words of one of the most famous sons of Frankfurt. You know who it is, Mr. Goethe. And Johann Wolfgang von Goethe, with these words, I think captured the essence of the city. Vibrant, forward-looking, and unafraid of change. Although I heard you calling for change, and clearly you are the advocate of what Frankfurt can deliver when it wants to. So, through its location at the heart of Europe and its vocation as a place of exchange, Frankfurt, from my perspective, is capable of embracing new technologies, to embrace change, and to connect the continent. It has always been able to do that. Look back into its history. It began with the flows of idea. As early as 1478, booksellers gathered in Frankfurt to trade printed works that carried knowledge across the borders. It was then later called books. And in so doing, it harnessed the revolutionary technology of the printing press. Then came the flow of people. Frankfurt's geography has long made it a natural crossroads. Each new wave of technology that connected Europe's citizens only deepened that role. Today, many of you use it. I use it on a regular basis. The Frankfurt airport welcomes more than 60 million passengers a year, making it one of Europe's busiest and most efficient hubs. Yes, some of you complain about the efficiency, I do occasionally, but try the others. Yeah. So, flow of ideas, flow of people, and nowadays, most importantly, flow of data. And Frankfurt is a master in that. It has become one of Europe's foremost digital hubs, handling around 35% of all European internet traffic, the largest digital connectivity hub on the continent. The city also dominates Germany's data center landscape, accounting for nearly 60% of national activity as of 2024. In other words, from books to bytes, Frankfurt has connected Europe past to its digital future. You will be talking about that today and tomorrow. And yet there is a paradox. The sector for which Frankfurt is most renowned is finance. And it is precisely the area where Europe remains least connected today. Financial integration across the euro area is now lower than it was before the global financial crisis. And even as technology reshapes our economies and capital moves at digital speed, our financial system remains fragmented, divided among member states, and split between banks, occasionally non-banks, and capital markets. And this fragmentation is visible at every level. First, in banking. You've spoken about it. Our banking union remains incomplete. And as a result, we still have only a handful of truly European cross-border banks. Some in Germany, some in France, some in Italy, but beyond that, well, the Netherlands, I think, could argue that it also has some. But we are dwarfs compared with what we could be. In fact, euro area banks now lend more beyond the euro area than within the euro area. Just 8% of their total exposures are cross-border inside the euro area, compared with 21% outside the euro area. Europe depends excessively on the US to generate wealth and fund innovation. Euro area residents, us in the main, now hold over 12 trillion euros in financial assets. Where? In the United States, an increase of more than 80% since 2015. At the same time, over half of late-stage investment in European tech companies comes from outside the European Union, meaning that non-European investors are shaping the companies that will define Europe's future. And I'm delighted about your initiative, because it is that kind of initiative that can actually change that paradoxical flow. Market infrastructure now. In 2023, the European Union hosted, bear with me, 295 trading venues, 14 central counterparties, and 32 central securities depository. I showed a map of that to the European Council last time I was there. They were flabbergasted. They're not necessarily in finance, but how this is spread in the European Union is something that we need to address and consolidate. Compare with the US, there are just 2 securities clearing houses and 1 CSD. There is a bit of room for us to progress. So this fragmentation drains liquidity, makes European market less attractive for listings, and pushes our firms to seek capital abroad. The consequences are clear. For the first time in 2 decades, the number of companies listed on the 2 main US stock exchanges now exceeds those on the 4 major European exchanges combined. In the meantime, the number of listed firms in Europe remains significantly below pre-financial crisis level. So we have gone back since the global financial crisis, rather than progress towards deepening of the market and consolidation of the banking system. Now, this fragmentation comes at a very moment when finance is more vital than ever to Europe's ambitions. There is a transition that will require massive investment, approaching 450 billion per year, and that is the transition to renewable energies. It is essential that we go in that direction if we want to lower the price of energy, if we want to move faster in the direction of artificial intelligence, and if we want to process the volume of data that needs to be processed. For that, public purse will not be good enough, not deep enough. It will have to be largely financed by the private sector, and capital markets will matter. I have discussed that a long time ago with my friend Christian Seving, and we both agree that this is a direction in which we have to move fast. It is also essential, in addition to that transition which will cost money and investment that will be paid back, it is also essential that we are more active in the security domain. Meeting NATO's defense commitments will require around 320 billion euros in additional annual public spending. We cannot count on somebody else to procure that financing or to offer the security that we need. And it is also essential, this financing and this capital, in order to boost productivity and achieve technological sovereignty by channeling capital towards Europe's most innovative sectors rather than outside of Europe. In short, without deeper financial integration of both banks and capital markets, Europe will struggle to fund its future, our future. This would be a missed opportunity of historic proportion and dramatic consequences. Europe cannot meet the challenges ahead if artificial walls continue to divide our financial system when we should invest not in artificial walls, but in artificial intelligence, among others. So I have argued in the past, here in Frankfurt, that unless we shift from this bottom-up approach that has kept us busy for the last 10 years and has not produced much, we move to an integration by a top-down method, the one that I have called a Kantian shift. There are too many national obstacles preventing the organic, market-led integration of exchanges and infrastructures. And it is not that we don't have the executive order mechanism as do others. It's just that there are so many vested interests everywhere. Those are hurdles and obstacles on the ways. History shows that strong institutions are needed to overcome fragmentation. Even in the United States, capital markets did not stay unified by themselves. They emerged in the 19th century at scale to finance the railroads, the transformative project of that era. But it was the creation of the SEC in the 30s that ultimately prevented state-level efforts, equivalent of our member states, to divide securities markets. So if we are serious about moving forward, we must complete the banking union, and we must apply the same logic and faster to capital markets. A single rule book, a single supervisor, and consolidation of exchanges. So I very much welcomed the statement and the comments by Chancellor Merz in support of this direction. If you missed it, it was last week. At the same time, we should not expect the European financial system to evolve along exactly the same path as in the US, where activity is concentrated predominantly in one city, 1.5, New York, Chicago. Europe will continue to function as a networked financial system with different financial centers developing with respective areas of comparative advantages. Frankfurt has many strengths in that regard, not least its growing role as a home to European financial institutions and regulatory authorities. The ECB is a point in case. We are here and happy to be here. And we've been here since 1998, setting monetary policy for more than 350 million Europeans. When Europe-wide banking supervision was launched in 2014, that responsibility too was entrusted to the ECB. The European Insurance and Occupational Pensions Authority, EIOPA, was founded in Frankfurt in 2011, reinforcing the city's pivotal role in our regulatory architecture. And this year, it is the Anti-Money Laundering Authorities, AMLA, that has joined us as well. And this has been a mutually beneficial relationship. You have more than 5,000 individuals and their family actually using their plastic cards in this city and around, and having their dwellings, their activity, their children growing up here. But with shared benefits come shared responsibilities. And European institutions have located here in the firm belief that Frankfurt will continue to provide the infrastructure that is essential to their mission. And today, I would contend that one stands out to be perfected, and that is education. All these individuals, talented, who have children, and who come to Frankfurt and want to be happy, like me. My children are so much older that I don't really care so much about education, but they do. And to attract and retain them from across the European Union, all European institutions guarantee that, this is the promise that we make, that our employees can enroll their children in a European school which provides high-quality education in multiple European Union languages. And that guarantee exists solely here in Frankfurt through the European School of Frankfurt, the ESF. I'm not going to dwell too long and too much about the ESF, but it is a case in point where I hope that all authorities, the state, the federal, and the municipality authorities, can join forces and demonstrate that we don't have to wait for 20 years to replace container-delivered education with decent and solid education. I have been working solidly for the last, I've now been here for 6 years. It's been 6 years since we've been discussing this matter. I have every confidence that the mayor of Frankfurt is going to continue in a very constructive manner to help the international community in Frankfurt to actually have the decent education system and the decent education premises that it deserves, and that was a promise. Yeah, thank you, yes. Well, I will finish with a little discussion that I was having with His Excellency the Minister. I was asking him whether he was optimistic or pessimistic about the future. And he gave me the right answer, by the way. But I won't share it with anybody, I promise. But do you actually know the difference between the optimist and the pessimist? Actually, there is no difference, because they both get it wrong. But the optimist is happier. So I want everybody to be happy in Frankfurt as I am. Thank you.